This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is on Back Roads of Illinois Today. I am Cesar Delgado from Today. We're glad you're here on this Thursday. The cattle markets is characterized by the highest prices above 200, but NWS is there in the news on again for right now in Mexico. We were talking about it with Dave Weber from Terrain Ag. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. The cattle markets is characterized by the highest prices above 200, but NWS is there in the news on again for right now in Mexico. We were talking about it with Dave Weber from Terrain Ag. Dave, how are you?
Doing great, Caesar. Hope you're well as well.
Dave, let's discuss about these markets for right now in the cattle sector. How do you explain what is your position on the cattle markets with the feeder cattle?
Boy, the feeder cattle market's been very well supported in the cash market. We've seen good buying activity from feed yards looking to replace the cattle they're marketing. Tight supplies abound. As we look at what feed yards are willing to pay, we're buying record break evens when those cattle are expected to come out of the feed yards. I think part of it's they've got to find a place to put some of the profits that they've had during 2025. And as we look at the tightening supplies, the forecast for fed cattle prices continues to rise, and we've got futures prices going into early 2026 in the kind of low 240s right now. Granted, the cattle we're buying have break evens above that, but I think there's a chance that those cattle will break even, maybe make a little bit of money.
I'll feel about the beef imported from Argentina. I know that we talked about it before the show.
Yes, the events of this week have been quite interesting to watch. The administration seems to think that we need to lower beef prices. I don't think there's any cattle producers that really agree with that. I don't know that importing more beef from Argentina is the solution. Even if you wanted to lower beef prices, I don't think there's enough exportable supply in Argentina to make any difference. It might move U.S. domestic supplies 1%, certainly less than 2%. So there's a limited impact there, even if we opened up some more of that volume to them. The real challenge, I think, is if that was going to happen or was possible, we'd already have seen them use up all of their allocated TRQ, their quota. They've used about 2/3 of it year to date. If the market was really driving us towards importing more Argentine product, they'd already have exhausted that. They haven't. I think there's some economic reasons for that. We've got tariffs on some of their product coming in the U.S. They also have an export tariff that keeps supplies of beef higher than what would normally happen within Argentina as they try to protect their domestic consumers. So I'm not sure that all of the plans here are going to work.
How is the fundamentals trends in the feeder cattle about this news for this week over Argentina?
Well, the fundamentals domestically didn't change very much. Boy, the the futures market reacted very negatively on Wednesday and somewhat on Thursday. We've seen prices move um, lower over the last couple of days, kind of from the three, call it 365, 370 kind of territory, back into the high 350s. Um, that was a result of maybe folks in Chicago looking at that and saying maybe demand for those cattle domestically might be less. I don't really think that's true. As we look at the reaction on the fat cattle side, we're both sides of even today after closing lower on Wednesday.
Yeah, it's tough for right now without these reports.
It is. The good news is the last time we went through this significant um, uh, shutdown when President Trump and his first administration, we'd learned from the previous shutdown in 2013, and lobbying efforts from both the beef and pork industry had gotten the mandatory price reports uh, uh, established as vitally important, and those continue to be funded and released here during the shutdown. But so we get price data on the livestock side and meat side. We're just not getting any slaughter data at the moment, so it could be worse. It's been worse in the past, but still doesn't really relieve some of the market pressures because we don't know what that underlying volume is that's going through plants.
What is your final thoughts about the feeder side in the north?
Well, I think we're going to continue to see very, very strong demand from northern feed yards. The basis on corn in particular is forcing a lot of corn farmers to look at alternative marketing methods. One of those being they're going to walk a lot of that grain off the farm. So we're starting to see probably continued purchases by those northern yards. If we look at eastern Nebraska, Iowa, eastern South Dakota, even into Illinois, the folks that might not have fed cattle here in the last several years, trying to dip their toe in it. Hopefully, it's an open winter and we can get those folks through that without having too much weather impact. But looks like there's going to be continued strong demand there. The feeders further south, basis is moderated. If we go look at places like Garden City and Hereford, Texas, basis narrower than it was a year ago, but still over the futures. I think Hereford's still in the $10, $20 over. And you look at what you could do in the Midwest and in the heart of Iowa somewhere, probably down 60 to 80 cents under the futures market. So call it close to $2 a bushel difference in feeding price. That's going to favor feeding cattle in the north for the next at least 6 months.
Thanks, Dave. It's been my pleasure to have you on Back Roads of Illinois today.
Thanks, Caesar. Always a great time to discuss things with you.
Dave Weber from Terrain Ag on this afternoon on Back Roads of Illinois.